It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
In Victoria, the stamp duty concessions up to $750, but $0 of stamp duty payable below $600. So that's a very active space for the first home buyers. And then still a sliding scale of discount between $6 and $750.
And that is James Annett on the Real Estate Breakfast, where we talk to the real estate professionals right around the country. And remember, because we are not a real estate company, we don't just focus on one suburb or location. No, we are right across Australia every morning. And just on that note, we've got that master list too, especially for those expats that might be thinking of moving back into Australia. You're not quite sure where to turn your attention to as far as real estate agents and companies are concerned. Just get in touch with us because we've got that list and we're happy to pass that on. Well, the weekend it came and went. New opportunities, of course, this week if you missed out at the weekend, which is kind of the nature of the real estate industry. There are winners and losers every day of the week. Maybe, just maybe, you are going to be a winner this coming week. At least you are trying to make it happen. That is the most important thing. As mentioned, Monday, October the 20th, actually a big day in Australia on this day back in 1973. The reason being the Sydney Opera House was officially opened by Queen Elizabeth II. Boy, that's going back some time. We'll have listeners that were probably there as kids. Snoop Dogg is turning 54 years young, and Viggo Mortensen, he is 67. Now, a handful of Sydney and Melbourne suburbs are defying the national property upswing with values. Cotality data shows that Sydney's Milsons Point and Kirribilli fell 7.1% and 6.3% respectively, while Melbourne's Armadale and Carlton dropped up to 5.1%. Analysts say that unit density and affordability limits are key factors, with inner city markets lagging behind stronger growth seen in mid-tier capitals like Perth, Brisbane and Adelaide amid shifting migration and affordability pressures. Well, right now, let's take you off to Victoria and catch up with James Annett from Belle Property in Armadale. And good morning to you, James. Welcome into the Real Estate Breakfast. Are you a Snoop Dogg or Viggo Mortensen fan?
Thank you very much. I think, like most people, saw Snoop Dogg at the AFL. It's probably my last engagement with either of them. We'll probably go with him, given the significance of the day.
Yes, what a day that was to have Snoop Dogg there. Well, let's talk about your market because, as I just mentioned, a little bit of a dip and all sorts of reasons being talked about. One of the reasons is the fewer high-end homes being sold. They're saying that is skewing median values.
Absolutely. I probably challenge your point on fewer high-end homes. I think still the same volume of high-end homes are being sold, but I think there's more lower-end properties coming to market. There's significant changes over the last few years in Victoria surrounding investors, higher taxes, more onerous legislation, coupled with probably less growth than most people have anticipated, seen a significant sellout of investors. So there's been a lot more of the lower price point that's been transacting, which, yes, if you look at the statistics holistically, it probably does bring the median down, probably does bring the average price down. But I think there's probably a bit of context to that too.
Yes, we talked about the investors that have been selling out from last year. What's been happening over the last few months around those investors? Because my understanding is they're still wanting to bail.
They certainly are, and at the risk of boring you with some statistics, last financial year for our office, 64% of all properties we sold were investors selling out and 89% were home buyers buying in. So that statistic definitely true that there's investors selling out, and the first quarter now being behind us, really no change in the numbers.
And what about the quality of stock? Some are saying that is lower, and as a result, there's a drop in the median price.
Exactly right. Typically, investors typically will own lower value assets, not always, but more typically, your mum and dad investor, for example's sake, they might have a 1 or 2 bedroom apartment for 400,000 or 600,000. So if there's more sales of that nature taking place, then it does drag the medians and the average down. So, you term it as investor grade stock, typically that's sub 1 million, sub 1.5 million, and there's been plenty more transacting in that sector.
Now, that article that I mentioned at the top from Cotality, they do point to the high unit density, and I think you're in one of those suburbs where you're seeing that as a result, and the affordability limits are somewhat of a key factor.
There certainly is high density taking place. There's no question. I think developers now, and I say now, I mean probably over the last 12, 24 months, are looking to do perhaps more high-end offerings, but that's because the previous 15 years had flooded the market with high volumes of lower quality offerings, and they found it a bit more challenging to sell those because there were so many on the market, and so they've changed their tack now. But certainly high density is something very present in our area.
What about the change of appetite from interstate buyers? I think that has now gone from not really that interested over a period of time to where that is now grown into, hey, we're a little bit more interested in what's going on in Melbourne.
We've seen a big shift over the last quarter, really, surrounding interstate investors. We had a time there where investors were few and far between, but I think the perception out there overall is that Melbourne's perhaps perceived as good value, and really the state that has probably the highest upswing moving forward. And so, yes, it has left, a lot of investors have left the marketplace over the last 2, 3, 4 years, but we're starting to see the tide turn on that, and we're starting to see more and more investment, particularly coming out of New South Wales. I've just sold a property yesterday to a lady from Queensland who's looking for an investment. We had one last week, a couple from Perth looking to buy an investment. So yeah, we're seeing all different tentacles across the country coming back to Melbourne now.
Yeah, this article, it was talking about Milson's Point and the unit market there. Some of the units originally sold off the plan to international buyers now facing higher stamp duty costs. They give an example of a unit that was bought for $3.1 million off the plan, resold for $2.55 million. That has got to hurt. The market now shows greater buyer caution. What in that space around the off the plan market, has there been some sort of burn factor for some people?
That sadly is not an uncommon story. The example that you just gave then, I could give you plenty of examples. There was one recently that we saw that was a 1-bedroom apartment that was originally bought off the plan for $770,000. They've gone and sold it for $495,000. That's obviously a pretty significant war story, but not uncommon. Sadly, when buying off the plan, often the salespeople will encourage you to compare other apartments within the development rather than other apartments in the rest of the market. And the sad reality is, at the time when that person bought that apartment I'm referencing, no other 1-bedrooms were selling anything like $700,000, but they weren't considering the whole market. They were only looking within that development. And that sometimes is where people get burnt. The new car feeling, if you like, of buying off the plan. The second you drive it out of the showroom, it's worth 10 to 15% less, is the case in some off the plan purchases.
We are talking to James Annett. He is from Belle Property in Armadale. When we come back, I want to ask James how he is faring with those first home buyers, the guarantee scheme, and we'll find out all about that next.
Stay ahead of the competition with the latest news, insights and data analysis on the Property Podcast that keeps you informed.
What else can you share with people that are thinking about buying in the Dubai UAE property market right now that may have never invested before, especially from offshore? What would you say to these people?
I invest in trends, so I don't really just invest in property or other things. So when I see there's a trend being established or there's an established trend going on for years, I normally try to get into that trend and benefit from it. The risk and reward ratio is actually what I look at. So when I put the numbers in and when I just my research, and there are a few websites, I think DXP is one of them, Property Finder the other one. When I check the historical appreciations and the ROI and the capital gains on all these investments, I found that Dubai was really, really a good opportunity. I mean, there's a trend. It's a buy market. It's resistant. All the conflicts in the world, it's still going up. And I thought that Dubai is actually a really, really good opportunity for everyone. But everyone needs to do their own research and their homework. Of course, not every off-the-plan project is in equal opportunity. I found that the quality and not a lot of luxury, but some luxury is actually what gives a very good return. The reason why I bought the Sec 2 properties when I was there a couple of weeks ago was that I saw the end product of that developer, because until that time, I only seen their websites, their projects, their brochures and everything, the 3D renders and everything. And I wasn't expecting the end product to be exactly the same of those 3D renders that they were showing me on those WhatsApp messages.
We are just as addicted to property as you are. The Real Estate Podcast.
And it is a Real Estate Monday. Yes, we're back into the grind of it. Once we get today out of the way, it is sweet sailing, hopefully for you, for the rest of the week. We are talking to James there in Armadale. And James, I want to pick up on the first home buyer's guarantee scheme, particularly in your market, sub $600,000 mark. What sort of activity are you seeing?
We've certainly seen an uptick in inquiry and engagement with buyers in the first home buyer sector since the 1st of October, when the new 5% deposit scheme's been introduced by the federal government. In Victoria, the stamp duty concessions up to $750, but $0 of stamp duty payable below $600. So that's a very active space for the first home buyers. And then still a sliding scale of discount between $600 and $750. So the 1 and 2 bedroom apartments are certainly that a lot of investors are selling out of. We're seeing first home buyers be buying them the majority of the time. And I mentioned this statistic before, 9% of all properties we sold last year were home buyers buying into the market.
And you're very, very active when it comes to auctions in your marketplace. We are now in that run-up to the end of the year. How busy are you hoping to be with those auctions between now and Christmas time?
We've got a fair bit on. I mean, it's springtime now. It's the most popular time for people to be selling. We'd have 8 auctions this weekend. We'll have 12 the following weekend on the 25th of October, which would be known as a bit of a super Saturday. And we'll be doing auctions right up until the 13th of December. There may be some the following week, the 20th, if someone's trying to squeeze something in before Christmas. But certainly our market fairly well auction driven overall.
And just in terms of the way in which people are behaving come auction time, is it fairly confident in the market with those auctions at the moment?
It's dependent on the offering. I think the appetite for what the offering is. If there's some scarcity surrounding that particular property, that might be a larger land component or a period home or something of that nature, then you'll find they'll be more popular than perhaps a type of property we were talking about before, high density apartments. Often in that sector, you're finding you might have one buyer, maybe 2, with an interest probably perhaps a bit less popular overall.
All right, James, we'll leave it there. Great to catch up, find out more about Armadale at this time of the year for 2025. Enjoy your Monday, enjoy the week coming up, and thanks for coming on to the Real Estate Breakfast this morning.
Thanks for having me. Good on you. Have a good day.
It's your weekday real estate breakfast with news, interviews and predictions every morning on the Real Estate Podcast.
We've still got fairly constrained supply of stock on the market, but there is strong demand out there. And if people are realistic on price, they're doing very well and they've got a very high likelihood that they're going to be able to sell their property and sell it for a pretty good price at the moment.
The average attention span is 47 seconds and people are doing all sorts to get noticed. But again, I think you've just got to truly believe in what you're doing. Be true to yourself. If you want to be in real estate, it should really be a genuine care about your clients.
And what it suggests to me is that you've got this backlog of buyers that have just been waiting for this scheme to start. We are basically injecting a flood of new buyers into a market that already has way too many buyers and historically low stock levels still. This
could show that there's an increasing level of competitiveness between the lenders to try and grab that kind of borrower attention, because there's not a lot happening with interest rates. So we're seeing that Westpac cut. We're also seeing more incentives being offered on top of home loans, as well as just the interest rate.
We connect you to the best real estate information across Australia. The Real Estate Podcast.